Perfect. Let me make sure we have the share. Okay, good. So basically I'm going to show you guys today is I just want to go through the markets. Let's just see where we're at. And then I'm going to show you what it's called the four context situation strategy. And I'll go through it. And then once I'm done, again, you guys can ask questions and I'll show you how I'm using it every day. It's the same thing. I'm still trading futures and options with it, or you can trade stock. You can trade anything. You can trade crypto. It doesn't matter. Um, but I'm going to show you real quickly how easy it is when I come in the morning. Now, if you guys I don't know if you guys, been catching but I put it up every day. On Twitter, I put up every day on the Trade90X Facebook. I do mail it out once in a while, but really I just put it up on, YouTube, Facebook, mostly Facebook and Twitter during the week, and on the weekends, YouTube. But if you watch my pre-market videos, I mean, I literally go through this in detail, and if you just keep watching, it'll become second nature. But here, let's go through the market, and then I'm going to show you what this new four context situation strategy is based on what I've been doing in the past, but really simplify it. So let's jump in and let me just show you where the market's at right now. So again, we got some important news coming out this week, so just make sure you guys are always aware of the news. We got ISM, we got ADP, we've got unemployment, we've got, all the non-farm this week. So this is going to be important stuff. So definitely going to set the tone for the week. So make sure you pay attention, especially with all the other stuff going on. But the bottom line is and Jeff knows this because he's been trading a long time. I don't listen to the news and what everyone else says. You know what? The information I'm showing you right here, this shows you everything you need to know. So one of the things that I like is the fear and greed index, and especially when we're at the extremes. Okay, when we're at the extremes, and I'm going to show you. Hold on. Let me just pull up another chart here so I can show you guys what I'm talking about. I'll show that. I'll show you another version of it. But here, so basically, when we get to those extreme levels, when we get in these levels and we have setups on the chart, this is where you're going to make the most money, especially if you're going to swing trade. The four context situation trade I'm going to show you, it doesn't matter if the market's up, down, or sideways, but I'm just showing you for the longer term trading. If you guys like to swing or position trade, I don't do anything unless I go through this routine every morning. This is what I do every morning. It's what I do every weekend. And this is what really helps me. Like I said, when we're down at these extreme areas, that's when I get really excited. That's where I'm willing to, really I want to really jump in and start putting on, first positions and start building. But when we start getting into the middle, that's when we get very choppy, and that's when we're going to have a lot of back and forth. And you need to understand that as a trader, just by understanding I always say the same thing. It's the right information, where to find it, and how to execute it into a high probability plan. And then here, barchart.com, market momentum. What I'm looking here is and again, this is stuff that all the institutions, people, again, this is what they use. I mean, they want to know the breadth of the market. They're usually using the 50-day moving average as kind of their midpoint. And you can see last month, 56% of stocks were above their 50. Going into Friday was 29 and then 35. Now, the breadth is still not above 50, so it's getting stronger, but it's still not what I would call strong. So what this tells me is that a few stocks are leading the way right now. Now, we'll see if that changes coming into the week. So basically right now we've got, we're at 35%. So again, right now, still again a little bearish, but definitely, the breadth is getting stronger. So then here again, always, this is my routine. Again, if you watch my morning thing, this is how I do it every day. This is how I determine, the thing. But what I'm going to show you today, the four context situation strategy, this is more of an intraday, and you can use it for swing trading. And again, all you're going to need to do is look at this. But again, I look at this stuff because I also swing in position trade, and I always want to trade confluence. So again, right here, if I only look at two things, I say it every morning. If I look at the S&P and the sectors, this is going to tell me, am I go am I bullish, bearish, or in a range? Right now, we can see right now in the short term, the bulls definitely have control. So if the S&P is bullish, which we'll look in a second, and this, I'm looking for long trades. Okay. Now, this thing I'm going to show you today, the four context, situation strategy that, that I kind of honed in on is, like I said, it's for both swing and mostly intraday trading. But again, I want to know what this confluence is. And again, I don't need to listen to CNBC or anybody. All I have to do is look at this. What is the breadth of the market? What are the sectors doing? I want to know what the sentiment tool is doing. And then also I want to know what the commitment of traders. This comes out every Friday, 3:30. I've showed you guys this in the past. And you should look at any symbol that really makes up the market. I look at, hold on, I look mostly at the S&P. And again, if you want to check out Bitcoin, it doesn't matter, but you want to know this information. Now, this is longer term bias, but look, here's the crazy thing. And I always tell people this. I don't care what the CNBC or Kramer, any of these guys say. This tells you everything you need to know right here on the symbol you're trading. So the S&P represents 75% of the market, 64%, which is controlled. Now, this is all smart money, meaning banks, institutions, hedge funds. This is telling you right here that 64% of the money that counts is still bullish in the long term, 35%. Now, when I see this change, then my bias will change for the long term. This doesn't affect our short-term trading. I'm just showing you the longer-term bias if you're going to be swinging or position trading. So again, all you have to do is look at the information. I go over it every morning. I go over it every weekend. I want to make sure you guys understand this is all you need is 4 or 5 pieces of information to determine what the market's doing without even, listening to guys on, YouTube or CNBC. This tells you everything you want to know. They can say whatever they want. This is telling you exactly what it is. Now, the other thing that I like to use, and again, this is everything I show you is free. Stockcharts.com has got these predefined groups. And for me, once you really understand price action, what bullish price action is, bearish price action, what a range looks like, then you can quickly look at anything. Like here's the S&P. If I'm bullish, I want to see lower left to upper right, higher highs, higher lows, momentum into pause. If I'm bearish, I want to see lower highs, lower lows. And if I'm in a range, I want to box the range. And am I going above or below? It's that simple. So right now, you can see the S&P. If I go right here, this is how quickly you can do this stuff. If you look at it, we're in a range right now from 3,800 to 4,200. Okay, that's as simple as that. So until we break out of 4,200 or 3,800, we are in a range. If you understand that, then yes, you can take advantage of this 400-point range with multiple strategies, whether you're an intraday trader, whether you're a positioner, it doesn't matter, but you need to know this bias. And then what I want to understand is, are the other 4 indices going along for the ride? Because the more that we have that confluence, which we have the Dow right here is NASDAQ's been leading the way. Okay. And here is the Russell down here, which small caps, which is not good because usually small caps usually want to lead to the upside and the downside, and it's not. So this concerns me a little bit. And then the other 3 things that I look at, this is all I look at. I look at the 4 indices, and then I look here, 10-year, the VIX, and the dollar. I don't need to see anything else. What is the 10-year doing? What is the VIX doing? What is the dollar doing? If we're going to get that sustained bullish market, these 3 should be coming down. Now, if you look at the VIX right now, let me go on a weekly chart with it.
It's coming down.
Yeah. So, but here's the thing though, for the last year, every time we've gotten into this area, okay. So remember, when the VIX usually goes down, the markets are bullish. When the VIX goes up, and remember, but if you look at the last year, if you just draw a line right here, every time we've gotten in here, we've reversed in the last year. So it's just time to pay attention. Is this right here as we get towards the top of that range of the S&P? Are we going to do it again? I have no idea. But all I'm saying is this is the stuff that I look at. So right now, if I see a rejection around the VIX, then I am going to start thinking about, you know, tightening up my longs and start looking potentially, you know, for shorts. And I'll do that with options. You know, for me, when I position a swing trade, I'm using options. When I day trade, I use options and futures contracts. But the VIX is, again, this is all I look at right here. This will tell you everything you need to know. But what you do need to know is you need to really understand, and this is what takes time, is you got to understand what bullish price action and order flow looks like, what bearish price action order flow looks like, and what a range looks like. And then basically looking at the symbols that matter right here. These are all the symbols that matter. Okay, so if you just follow this, I don't need to look at 20. Again, I'll say it again. I don't need to listen to, you know, I joke around, and Jeff, no, see, we have this soft spot for Kramer, but I don't need to listen to him. I don't need to listen to anybody. This tells me everything I need to know. Now, if we can't figure out what's going on, then for me, I automatically, anyway, I day trade anyway, but if I can't figure out what's going on for the long term, I don't even think about position or swing trading. I am a intraday trader, and that's it. If I can't figure it out, the other thing that I look at, and I'll just go through all this, and then I'm going to get to the strategy, and then you guys can ask all the questions you want. So let me just get through all this. And again, here's something else I look at. In stockcharts.com, it's free. Everything I'm showing you is free. You don't need to pay for any of this. They do have paid versions, but you don't need to. So I get a lot of people that also ask me about, oh, I like to trade stocks. I don't want to trade just the S&P or the indices. No problem. So here, this is how you do it. Again, you need to understand, first thing, what is the S&P doing? Where is the top of the range? I just said 41 to 4,200, 3,800 to 3,850. If we cannot break above that or below, you know, like I said, we're trading in a range. So, but as long as you understand what the price action order flow is, then you're ahead of 99% of the people. So you basically say, okay, I know what the range is. We had a nice basing formation. We had momentum pullback, nice longs here and here. Great. Now, if we start seeing the bullishness in the S&P and you want to trade stocks or other ETFs, the first thing I do is I look at the 11 sectors, main sectors, and I go, okay, S&P's bullish. Which one of these ETF sectors looks really good? Well, for me, I can just eyeball it quickly. XLK, XLC, XLP. I mean, these are ones that immediately look the best. So what I would be doing is if I want to go long, what I would do is either trade the ETF or I'm going to go look at the market leaders in those ETFs and I'm just going to pick it out. So here, I'll give you one more example and then I'm going to get into the strategy. I just, again, wanted to go through what the bias is. But here's the Dow stock. So say you're bullish on the Dow. This is how quickly I can do it. So the Dow is the top 30 stocks. So basically, when I see the Dow and the S&P bullish, what I look at is once you understand what bullish, bearish, and range order flow really looks like, I mean lower left to upper right, clean momentum, pullback, pause, bullish, bearish, upper left to lower right, same thing, momentum into pause, pullback, ranges, equal highs, equal lows. So I can just tell you by eyeballing this, here's 30 stocks right here. I can tell you right now, I'd be trading Apple, I'd be trading McDonald's, I'd be trading Coke and Procter & Gamble. That's it. Maybe Walmart here, but Apple by far for me has the best looking chart. Just by looking at these, that quickly, I can look at the 30 stocks, and I don't really want stocks that are very gappy. I just want things that have smooth price action. Lower left to upper right, where you have momentum pullback pause, because that's how you make money. When things are obvious, that's how you make money. You don't have to complicate it. All you have to do is master. Okay, what is the information telling you? Are we bullish, bias, or in a range? What is the S&P and the indices telling you? If you don't just want to trade the indices like I do, then all you have to do then is follow. If you like to trade Dow stocks or if you want to trade S&P, this is how quickly I do it. I pop it up and I can quickly see which stocks have smooth price action. Cisco also looks pretty good. But again, a lot of these don't look that great. And I can quickly, get rid of them. And then I can put that on list. That's, again, if you want to trade stocks. So to wrap it up, first thing I always do is we look at news. I do the same thing every morning, every weekend, every post-market. I look at the news, make sure I understand which news is coming out. I want to understand the fear and greed. Where is the sentiment? We're in the middle. I already know just from being in the middle, price is probably going to be choppy. I want to look at the 50-day, the breadth of the market. I want to see how many stocks are above and below their 50. We're going into the weekend at 35%. So anything below 50% is still not very strong. So we just need to keep that in mind. But if we do look over the last, week or two, we have been going up. So we just got to keep that in mind. And then here we can see the sectors right here. Now, one day doesn't make a trend, but the 1 week is bullish. And the 1 month is definitely mixed, but it's starting to, see some more bullishness. So, and if you want to look at that a little more detailed, just go to the performance tab. And you can quickly see right here over the last week, there is no bearishness. Here there's still a little bit, but right here you can see. So again, if you understand the tools, what to look at, you understand, are we bullish, bearish, indecision? And then once you understand, have a clear thing. And like I said, if it is not clear to you, I don't even think about position and swing trading. I just immediately default to my J trading. Last thing I want to do is put on any swing or position trades if I do not have that confluence to the bullish or bearish side, because I'm just going to get chopped up. All right. So I showed you all that. I showed you the stockcharts.com quick ways. I like their free, kind of predefined groups. And one other thing I'm going to show you before we get into the charts that I like. So I built this thing that it's basically this right here. It's the breadth right here, how many stocks are above and below their 50. But what I did was I have here, it's the S&P, the Dow, the NASDAQ, and the Russell. So I have all 4 of those up. But what I have here below is how many stocks, this is the whole stock market, how many stocks are above their 200, their 50, their 20, and then I have the VIX on the right. And why do I have this is because what I'm looking for, and this thing right now, all 3 of these go back 20 years. So here, let's just take the 50. So what I'm looking for is when we get down to the extremes is when I get excited. Doesn't mean I have a trade. It just means, hey, pay attention. So if we go back 20 years, and it's amazing to me, people don't use these tools because these will give you such an edge. So if you go back 20 years, and if you look at it, every time over the last 20 years, we've been where the only 0 to 20% of stocks have been above their 50. We've had a very high probability of going from bearish to bullish. And over the last 20 years, every time we get into about 70 into the mid 90s, we've had a high probability of going from bullish to bearish. That doesn't mean it's always going to happen when we want to. But again, this is just an odds enhancer. And then what I do is I use the 20 as a little bit faster. Now, ideally, what I really like is when I see the 200, the 50, and the 20 all down in the green or the bob. So what does this basically tell me? What this tells me is when we get down to this green area, it means, hey, start tightening up. Like if you're short stock, start tightening up your shorts, start taking profit, and start thinking about we might be going the other way. And then the verse, when we get up into the red area, it means, hey, if you got bullish trades on, start thinking about, managing that trade, tightening up your stops, take some profit, and just prepare potentially. Now, the ultimate is once you get into the green or red, so remember, the VIX does the opposite typically of the market. So if we're going to be bullish, like we're starting to see the bullishness we have been on how many stocks above their 20 and the 50, the VIX was going down. So we had really nice confluence there. And then same thing, if the VIX is going up, we want to see these going down. So again, it's an odds enhancer. And then I have all 4 of the indices up top. So I can make sure if I'm bullish, hey, am I seeing that? And yes, we are. S&P, NASDAQ, Dow. Like I said, the Russell, though, is not really playing along. We'll see. It's looking a little bullish there, but it's been kind of in this range. So we got to see if the Russell participates. But anyway, hopefully that makes sense to you and gives you some value. But these are odds enhancers that I use. There's only 4 or 5 of them. You can quickly do this in 5 minutes every day once you really get good at it. And then the only other thing that takes time in your pre-market routine is just going through your charts. This is why I always recommend if you're even if you're advanced, honestly, you master 1 or 2 symbols and trade them over and over and over. you know what, you'll do very well. I think everybody gets caught up. Sometimes I know I did, oh, I got to have so many symbols. No, you don't know, you don't need to. The indices, this is why I like trading the indices. The only other symbols I ever really look at is I'll look at some oil or gold or Apple. But for me, the indices do everything I need them to. And by looking at all four of these, for me, and I'm going to show you now the strategy, whichever one looks the best, I'll trade. Whichever has the best momentum, has the most space, it has the most obvious bullish or bearish price action. That's it. That's how simple my decision is. So I did create all this. I'll email this to you guys after this, and I'll actually add some chart examples to this. But these are all the it's what I'm going to discuss right now. Now that we've gone through the bias of the market, I'm going to discuss how I look at the market. It's called the four context and situation strategy. This will work on any asset class. It's basically rinse and repeat. It's about building the repetition and discipline. Always being realistic and humble, asking questions. And then also, like I said, the key is back testing and journaling this to the point where it becomes second nature. And then always, and then I'm going to get into it, the risk management, you have to master that. If you do not back test and learn your numbers, okay, and that'll take at least 50 to 100 trades. It may take some people more. But again, why do we back test? Number one, listen, back testing is never going to replace live trading. But if you don't understand how the markets work, you don't understand your process, and you don't know your numbers after 50 to 100 trades, you are never going to succeed. Not just trading. You're not going to succeed at any other business you do. I don't care. In any business that I do, if I don't know my numbers, I fail. So trading is no different. And the way you do that is take the symbol, the time frame you're going to trade, minimum 50 to 100, to 100 trades based on the process. And then on the risk management, for me, it's 1 or 2%. I understand sometimes when you have a smaller account, sometimes you got to push it to 2%. But like I said, if you're trading, with 50K or more, you don't need to be going over 1%. I never risk more than 5% in a day. This way it protects me. It's always about preservation of capital. Okay. If I'm at 1%, that means I got to lose 100 trades. Say I have a bad streak, I lose 10 trades. At least I have 90% of my money to reevaluate. I didn't blow my account. If I keep it at 5%, even 3 to 5%, it just really depends on your plan, but you should never risk more than 5% a day. And then on the trades that I look for, I typically look for a minimum of 2 to 1. I don't want to trade 1 to 1 because I can just tell you from enough experience in trading, listen, if you could become, and there are people that do better, there are some people that do worse, but if you can do 50% and hit 2 to 1, you're doing very well. I can tell you right now, if you have to have pressure of making 70% of your trades, I'm telling you, you're not going to last. It's very difficult. It's very possible, but it's very difficult to do that month after month. So this is why we want to have more risk reward on our trades. And again, if I can't find the trade I'm looking for, we pass. And then also, and this just depends on your plan. You have to determine, like, again, once you hit 50%, do you feel more comfortable going to break even and protecting your capital? For me, I don't typically like doing that. I feel confident in the trade. And if I keep it 1%, I let the trade work. I've got my entry, I've got my stop, I got my target. And if I'm only risking 1%, I'm okay with that. Now, if I was risking, if somebody was risking a bigger percentage, then I absolutely recommend that as soon as it's over 50% profit, put in a profit stop or break even and, preserve your capital. So with that said, let's go into this strategy. So we know our bias. I showed you like the way I did in the past. That nothing has changed with that. I look at the same 4 or 5 pieces of information. Again, I want to quickly understand, what is the market context and structure? Who has control? Is it obvious? And what are my odds enhancers? And then where are the zones that I want to trade? And what I'm going to show you right now, the 4 context and situation. Let me go to the ES and start. I'm going to show you how I use. So I go through all the charts. Okay. For me, I do it, but I'm going to show you this where you don't even need to look at the other charts if you don't want to. But I always want to know what the main trend is in the monthly. The 15-minute to the weekly is going to be our intermediary trend. And the weekly, you can see right here, there's that range right here. So until we break out of that, you know, we could just rattle around here for a while. So that's the weekly. And if I'm going to do faster swing trades, like a slow, well, actually, I'll call it my slower swing trades. Here's the range from the monthly and weekly in red. And we can see the 4-hour chart, we're trading inside the range. So if you understand ranges, and hopefully from the past you haven't forgotten, when a range is the same thing to me. It's the top third, middle, bottom. I don't care if I'm on a 1-minute chart or a yearly chart. It's all the same. So the top third, and I'll show you right here, and then we're going to get into the strategy. So basically in the middle, I go half size. I don't usually like trading the middle of ranges because they're going to be choppier, but you can. But if you're going to do it, I go half size, and I won't even consider the middle of a range unless it has 2-to-1 risk reward space to the top or the bottom of the ranges. So here are the 6 trades I look for. I don't care if you're on a 1-minute or monthly. Okay, I don't really care. These are the trades I look for. So number 1. If I get into somewhere in the top third, I reject, and we start making lower highs, lower lows. I'm looking for a short down to the middle or bottom. The red entry candles I look for are shooting stars with a wick on top, red engulfing, or an inside red doji. The bullish candles I look for are going to be a green pin bar, green inside doji, or green engulfing. And the other thing that I always want, if I'm trading long, I want some kind of support to trade off of. And if I'm trading short, I want some kind of resistance. So that was trade number 1. Trade number 2, we come up, we have that strong momentum above this range high, and we call it the fake out breakout, and we reject, we come back, and we fade short. That's the second trade I look for. The third trade that I look for, and again, this is going to be the same trades on a 1-minute or a yearly chart. If I break above any type of range or resistance, whether it's above or below, I need to see momentum, minimum of 1 or 2 try rejection. And if I'm bullish, I need to see those green entry candles. So those are the 3 trades on top. Here are the 3 trades on the bottom. I come somewhere, anywhere in this bottom third, and I start making higher highs, higher lows. We get the multiple rejection. I'm looking long to the middle and top. If we get the fake out breakout near the bottom of the range, we get below it, and then we fake out, we come back in. I'm looking long. And if we get the personality change from an inside range to an outside range, and we break the bottom of the range or any level, I need to see momentum break 1 or 2 try minimum at or below that range low. So those are the 6 A trades that I look for. And what I do is I set alerts. And when price gets there, it alerts me. And then if I get the confirmation I'm looking for, I'm good. Now, here are the 2 middle trades I would look for. But again, I'm going to go half size. I can just eyeball it. We do have space. So what I'd be looking for typically is, here's the middle right here. I'm going to look for some kind of either 1 or 2 try or some kind of rejection long. Now you got it right here. You had the momentum. Come on. This is getting a little bit higher than I like, but if we have 2-to-1 and you got the space, there you go. Nice trade. You got the 3, you got the doji, and you got the engulfing candle. Let's see if it was 2-to-1. And my stops are always going to be looking left. I do 2 types of stops. I do structure stops, looking left. Where is the nearest candles? There's your structure right there. Or I'll do an ATR stop, 1 ATR to 2 ATR, depending on the volatility. And this trade is right there. It gives us 2.7-to-1. The 2 right here is right there. So right now, if this would be a trade that you could be in on the 4-hour on our slower swing trading chart. And the other middle trade that I would be looking for, if we got a personality change and we broke the midpoint, 1 try, 2 try, I'm looking short. So those are the 8 main trades that I would look for on this time frame. And again, I don't care what you trade. I don't care if you trade crypto, stocks, forex, future, it doesn't matter. I set up my charts the same way. I look at the same information. I want to know if the monthly and weekly, what they're doing. Are they bullish, bearish, in a range? We know we're in a range. I go down to the whatever you like to trade as your slower swing chart. 4 hours, a good one for me. There's the range right there. Nice thing about TradingView, we can just right click and sync it. So we know we're in a bigger range on the S&P. We haven't broken it. And I just showed you 6 A trades, 2 B trades from the middle. And those are the trades. I don't care if this chart was Apple. I don't care if this was Bitcoin. It doesn't matter to me. The setups are the setups, and I wait for my setups. That's it. There may be some other stuff. Those are the ones I look for. So right now, if you're not managing that long on the S&P back up, then you've got to wait for price to get back up to that near the top of the range, and let's see how it reacts. Now, let's get to the strategy, and I'm going to, again, I call it the 4 context and situation strategy. There's four contexts. That's it. And I'm going to show you 10 different symbols very quickly when I come in the morning. So make sure you write this down. I have it recorded. It's on here, but take notes. And then afterwards, you'll ask questions. Let me remove any drawings. So here's context number 1. The first thing let me just explain what each thing is. So this is your previous day's high. Here's your midpoint. Here's your previous day's low. The most important thing to me is price above, below the previous day's range, inside it, or do we have a fake out breakout, or do we have context number 4? And context number 4 is basically this. It's a tight range, or it's big choppy candles. We have no idea yet what our edge is. We do nothing. So context number 4, anytime you see choppy candles or a tight little range where you have no idea what is happening, it gives you no edge, that's context number 4, and you do nothing. And you either do nothing and wait for context number 1, 2, or 3, which I'm going to tell you what they are in a minute, or you go to another symbol that has context 1, 2, and 3. Now, context number 1 is when price is above or below the previous day's range. Now, being above the previous day's range or previous day's range low will tell me whether or not I have a swing trade or not. Okay, that's how quickly you're going to determine. I don't care what symbol, and when I'm done, you'll give me whatever symbols. We'll look at it. If price, again, I'm going to reiterate it. If price is not above the previous day's high or below the previous day's low, I am not interested in a swing trade. Now, if you don't even swing trade or position trade, then you just day trade this. But what this tells you is, on context number 1, is that if we are above, okay, now, if we're above doing this, we have no idea what it's doing, okay? But if it's doing this, where you've got beautiful slope, momentum, higher highs, higher lows, this is what we call super bullish. And when we are super bullish, we are looking for the same setups. We're looking for some kind of momentum into pause or pullback, and we are looking for the trade. So I can tell you unequivocally, just from looking at this chart right here, and this is a 15-minute chart. So we use a 15-minute or 60-minute chart for this strategy, okay? I like to use the 15-minute strategy, the 15-minute chart, because I can see everything. And once I determine whether or not it's a swing trade or a day trade, then what I will do is go down to either a 1 or 5 minute. If we're on a swing trade, I'll have my, my 1 or 5 minute up anyway. But if this is going to be a swing trade, then I also want to make sure I know where the bigger, levels are above and below. Now, this purple is the weekly high-low. This right here, this bigger one, is the yearly high-low. Now, let me see. Do I have the monthly on here? We do. Let's see. Maybe it's, oh, there it is. So the monthly is where the yearly is. So the monthly is in orange. So the previous day's range high, low, midpoint are our most important. The second most important is right here. The previous day's close, and this red box is the open. It's the 5-minute open range. Those are going to be most important. And these Camarilla pivots, these are second. I use them for potential support and resistance. That's really all I use them for. But again, context number one, are we above or below the previous day's range? Yes, we are. So once we got above, and this is the right here, 9:30 is where we I usually trade from 8 to 11:30 is my time. Okay, but here is 9:30. That was the US right there. So because you understood this context, this break and retest, that's a beautiful, beautiful trade. That it doesn't get any better than that. Goes below structure, or you can go below that wick. And then I'm looking at 2 to 1. And what I recommend is for anybody who's newer, every trade you do, you take off a 2 to 1 until you have 3 to 6 months of proven consistency month after month. You take every trade off a 2 to 1. You don't even think about going for the higher targets. Okay. Now, that was trade number one. If you missed that trade, and let me go down to a 5 minutes so you can see a little bit more structure. That was trade number one. Here was trade number two. Price had momentum, multiple dojis. We had an engulfing candle. There was your long. Now, just so you know, the R4 in Camarilla pivots is the breakout pivot, which is a positive sign. Below S4 is the breakout pivot. But again, the most important thing is price above the previous day's high, below the previous day's low? Is it inside? So I told you what context number 4 is. I'm showing you context number 1. And as long as we are above and we continue to make higher highs, higher lows, do not even consider shorting. Okay. Now we'll show you, I'm sure when we look at some other ones, I will show you some other ones, but this gave you, this was the get. Again, here's the one problem though. You see this strength right here? This only happens 10% of the time. 70-80% of the other times we're really trading more in a range. So when you get these 10 to 15% opportunities, take advantage of them because they don't happen all the time. But you need to be able to understand, and that's why I love this strategy that I created, because this will quickly tell you what the context is. There's only 4 of them, and only 3 of them that you're going to trade. 4, you do nothing. So I showed you number 1. Now below. Now we'll find one that has below, but it's the same thing. We'd be doing this, looking for, the higher, lower highs, lower lows. Okay. And then we'd be looking for our continuation shorts. So that's context number 1. You know, context number 4 now. Now, what is context number 2 and number 3? So context number 2 is going to be if we're inside the previous day's range. If we're inside, and I'm going to go through a bunch of symbols, and then we'll quickly determine, is it context 1, 2, 3, 4. So context number 2 is basically when price is inside the previous day's range. What does that mean? What that means is that we are a balanced neutral day. Okay, I'm not going to get into like profile and all that. All you need to know is when price is into the previous day's range, until it can prove otherwise, it is a neutral balance day. And what that means is that buyers and sellers agree on price. So what you're looking for, it's going to be the same thing I told you on the 4-hour. So basically what I'm looking for is, do we have in this top third, which we basically, it came here, there was a trade in the overnight, but we didn't get the follow through. But I'm going to show you right here because I'm not cherry picking. Now, here was your recent low right here. Okay. And look what price did. All right. So I'm going to show you context number 3 first. So context number 3 are fake out breakouts at the previous day's high low. Okay. That's it. So look what price did. It came above the previous day's high, but look what it did. It went into a choppy range. Context number 4. It didn't do this like this over here. It didn't give us higher highs and higher lows. So when you see that, again, we don't know. This is why I call it context number 4. I don't know yet if it's going to go lower or higher. If it goes higher and gives us a break and retest, I'm going long. But look what it did. I call it the fake out breakout, is when price gets above the previous day's high or below the previous day's low and then snaps back with a rejection, 1 or 2. Either one of them is fine with a stop above. So this trade right here would have been like this. I'm going above structure, this big, previous day's high and this R3, that's good enough for me. And I'm looking down at 2 to 1. And this trade did not work out because look left. This was the recent low of the overnight session. We couldn't break it. Soon as you saw this engulfing right here, as soon as you saw that, and this is why we backtest and journal this. As soon as you saw we couldn't break the recent low right here, this trade was a scratch trade, or if you didn't take the break even there, it was a losing trade, and that's fine by me. Again, I'm not going to cherry pick it. That was a good setup. You had a 1-2 try, fake out breakout, number 3, and because the low was here, and because we couldn't break the recent low, and we put in that engulfing, that told you this trade wasn't going to work, and you got out with a small profit, or you took the loss, depending on what your plan is. But again, it's understanding the context. Now, this is context 4. This is context number 1. Fake out breakout to the previous day's high and previous day low was context 3. And again, context number 2 was right here. We were inside, we started inside the previous day's range, okay? And what we're doing with context number 2, we're looking for, ideally, we're looking for the top third rejection to short, bottom third rejection. Now, again, with ranges, we can do the middle. I'll go half size, but if it has a 2 to 1 space to the top or bottom, we can take that. But I call those the B trades. The A trades in context number 2 are going to be the top third and bottom third. We did not get that here. We just got straight up. And I definitely can, I have no problem if somebody took this long right here, just right here. We broke, we held. I have no problem. But again, if it didn't have 2 to 1, I would definitely reconsider. That's just me. But again, context number 1 is when price is clearly above the previous day's high low. The reason why context 1 is so important is because that's going to determine also whether or not you even consider a swing trade. Because think about it. If I want to swing trade a stock for 2, 3, 4 days, we should be breaking the highs and lows. If we're not going to break the highs and lows, then basically what that's telling us, it's either a fake out, breakout, neutral day, or we have context number 4. We can't figure it out yet. So now what I'm going to do is let's go run through a bunch of symbols, and then we'll go through some questions. All right. So let's go do NQ, and I'm going to do a bunch of different symbols and asset class so you can see it. So where was the overnight right here? Now, the one thing I always do is whenever I come in, I will mark the high and low. So when I came in, this was the Globex high and low. Okay. Where was price when I came in? Right here. When I came in right about 6 o'clock, we were in context number 2. But when we started the day, it was context number 2. We went into context number 4, and then we had the fake out breakout. You had a little rejection candle right there. If I go to the 5-minute, right there, we had the fake out breakout, come back in, and that was definitely a decent trade. But look what happened. Couldn't break the recent low, and then we rejected. And then here was your open right here. And if you don't mind trading the open, I recommend, this is just my recommendation, when you're newer, wait 15 to 30 minutes. Let the price settle. If you have 3 to 6 months of proven consistency and you've really mastered the price action order flow, then I have no problem with you taking this trade. That was a beautiful rejection. We came up, but this gave you just as nice a trade. It gave you momentum break and retest right here above the previous Globex high and the R3. Beautiful. It doesn't get any better than that. So think about what this did. This went from context number 2. It went above. We had the fake out. We went to context 4, fake out, breakout, context number 3, came back into context number 2, and then broke back above to context number 1. And because you've put in the time with your back testing, you've put in the repetition, you know exactly what context 1, 2, 3, and 4 means, and then you know what the setup is. Does that still mean you're going to win every trade? No. Again, my goal is always, to be somewhere around 50, 60%. And if I can get that 2-to-1, I am crushing it. But this, when I really figured this out, this has changed everything for me, because I come in every morning, I go through my routine, I come to the charts right here, and I look to see which chart which one has the smoothest price action, which one has I feel the best play, and I'm going to gravitate towards that. Now, sometimes it changes during the course of the live session, but most of the time in the pre-market, I can see which one looks the best. So this had a complete personality change. This went from context 2, context 4, context 3, back to context 2, and then we broke out above, which proved that we can either swing trade it again, or if swing trading is not in our trade plan, we just day trade it. And this was your trade right there. You didn't have to take any other trade right there than this trade right here. Okay, this trade gave you 3, 4, 5 to 1. It just higher high, higher low, higher higher low. But again, if you're a newer trader in this strategy, you take it off 2-to-1. I don't care. 2-to-1 every trade you take off until you have 3 to 6 months of proven consistency. Pad your account, learn, back test, journal until this thing becomes second nature, like drinking water. Okay, so we ended up bullish. Beautiful, beautiful day. And again, if you weren't bullish in NASDAQ, if you trade NASDAQ, you have to ask yourself why. Let's go look at the Dow. And again, I'm going to look at other asset classes so we get a different view. But again, what did the Dow do? Where is the previous day's high? Where is the low? Where is the midpoint? Where is our weekly? Where is our monthly? Where is our yearly? Where is the open, the previously closed? What did we do? So if we look at 930, let's look at 930. Okay. Now, if you're an overnight trader, again, mark the most recent low and high that we come into before the open. That's what I do. So look at what happened here. So you had context number 2, and it doesn't get any better than this for overnight traders. You had a short right there. You had a beautiful long right here. I mean, beautiful. This was definitely, right now, we're still in context 2. We didn't get a fake out breakout here. These are all context 2 trades right here. It doesn't get any better than that. We trade everything off resistance, off support. As long as we have 2-to-1, if we don't, then, again, that's a judgment call for you. Here's your previous day's high. We did not have the rejection to short. And look at what we had here. You had a break and retest. If your game plan is okay to trade the open, doesn't get any better than that. All you had to do was wait another 15 minutes to 30 minutes, and you got a phenomenal trade long right there. Doesn't get any better than that. This is context number 2. We went from context number 2 to context number 1. Context number 1 gives you the right to swing trade or day trade. And remember, I won't even consider a swing trade unless it's above or below, because that tells me above and below we're super bullish. It doesn't get any better. Again, if you were a Dow trader, here you had 2 trades right there. This one is definitely, again, I understand it, much better, nice confirmation. This is definitely a high volatility trade. And I do recommend, once again, if you're a newer trader, 3 to 6 months of proven consistency before you consider that open trade. But again, once you understand context number 1, 2, 3, and 4, this will make your life simple. It is about understanding what context 1, 2, 3, and 4 means, what the setups are, what the entry, stops, and targets are. And all it does is take repetition and practice. That's all it takes. Again, you're not going to win every trade. This is why we backtest and journal, so you can also get used to the psychology that you're going to lose trades, even if you do something right. Okay, but it doesn't get any better than this. Let's go look at the Russell. So again, let me get rid of that. We put 930. Okay, so context number 2. Okay, here's your previous day's low. Here's your high. There's your midpoint. Now the Russell overnight was not as strong as the other ones, but we had one try, two try right here for a long, right there. We're basically trading in this little tight range right here. But this, and this is what we call the top is M patterns. This is a W pattern. Whenever I see the M and W patterns at key levels, I get really excited. So this trade right here came right up, and look what it did. We broke retest. Now this one didn't happen until about 10:45. Now we don't have, like I said, between 8 and 11:30. I don't know when the trades are going to happen. Some days you may not, get any great setups, but I can tell you right now, doesn't get any better than that one. We went from context number 2, okay, context number 2, break and retest, and what a beautiful candle that is. And your target was up to that nice weekly. And then if you trade the afternoon session, which I don't, the last hour gave you that kind of W pattern again. Very nice. But again, I don't really trade. And again, because it's context number 1, we have more of a bullish bias. So just keep that in mind. That's why I'm not surprised that price rejected the top. Okay, that's the Russell. Now let's get into some other symbols that may look a little different. So here's oil. Again, I don't care what this chart is. Really, it doesn't matter to me what it is. As long as the chart has volume, I don't care. Is it context number 1, 2, 3, or 4? And do I know what my thing is? Do I know what context 1, 2, 3, and 4 is? Do I know how to spot it? Do I know what it means? Do I know the entry? Do I know the stop? Do I know my targets? Do I know how to journal and review the trade? That's all I care about. And I can look through 10 symbols quickly and see what I'm looking for. So look here, previous day's high, previous day's low. Here is your midpoint. There's your open, your 5-minute range. What did price do? It started off right here, and we got a really nice rejection right there. Definitely, I could definitely, absolutely love that short. This would, if we would have had more space from here to here, definitely could have considered it, but no, for me, too tight. Definitely beautiful short here. And that trade came all the way down here. This trade never came out and stopped you out. So look here, W pattern at the pivot in S3. Whenever I get those key M and W patterns, that is a beautiful long for the overnight traders. Now oil opens up at 9 o'clock. So overnight traders had a short and a long, absolutely, in this overnight. So what did oil do? Now oil definitely consolidated right here into its open right here. And typically when you have consolidation, you're going to get some kind of a break. Now, where was price? It was above the previous day's range. What does previous day's range? Well, this was context number 4, but I said breakout. Now, for me, that's just me. It's part of my plan. I don't like just taking pure breakouts. That's just me. I like break and retest. So for me, I would have missed that trade. That's me. But if you like pure breakouts, beautiful trade long. Why was that a good long? Because again, it's above the previous day's high. It favors the long price action. Okay. Now, this was a beauty. Look at this right here. This thing came down. Okay. This thing came down. Now, I also, again, I'm going to say this again. If you're somebody who's mastered this and you have 3 to 6 months of proven consistency, you understand price action order flow, I have no problem with this counter trend trade. Why is it counter trend? We're above the previous day's high. That means we're bullish. But we all know that price, when it always has, it expands, it consolidates, it expands, it consolidates. So if you understand that, this trade right here, but again, it's a pure counter trend trade. So newbie traders, no counter trend traders, you do not do this until you have proven you've mastered this. Now, this is good. I love this trade right here. So again, remember, we're in context number 1. look what happens. We come back to a very key level and we reject right there. I mean, it does not get any better than that. And for me, that is a long all the way, because again, we're in context number one. We come and the buyers just reject the shorts, and boom, we come right back up. And they bought here at wholesale at a key area. So oil ended the day in context number one. And again, overnight traders absolutely had some trades. And again, I don't take this trade because I don't take pure breakouts, but you definitely had, again, if you're a seasoned trader, a counter trend, but the trade of the session definitely was this one. If you just stayed patient, and that's about the other thing. Can you stay patient and wait for context 1, 2, and 3 to set up, and understand, do not trade context 4. And this is why we journal. Again, this is why we journal with detail, because this is going to help you build. Let's go look at, I'm just going to look at a bunch of symbols. I'm going to look at the dollar. Here's the US dollar. I don't care what it is. Now, I don't trade the US dollar, but again, tell me what it did. Here's your previous day's high. Here's your previous day's low here. So right here, it gave you the fake out breakout. It started in context 2. It dipped below the previous day's range low. There's the weekly, and then the buyers came up and rejected. So if you were trading a dollar overnight, that was a beauty. Right here, this was a beauty. Break, retest, rejection. Break, retest, multiple rejection. Boom, right there. Doesn't get any better than this right here. Now remember, the middle is going to be choppy. You can see it's choppy. Okay, there was a trade there, but this and this trade in the bottom third and this, I mean, that's as money as it gets, because you understood it was context number. Inside is context number 2. Context number 3 is the fake out break at the highs and lows. You recognize that context number 3 right there at a key support, double support. Then you had momentum, break and retest at a key level with a rejection candle. It doesn't get any better. That's as a trade as it's going to get. And I promise you, if you take 10 of these trades, these type of trades will work 7 out of 8 times. Okay. It's when you take in this choppy, like this type of trades, when you're in choppy price action, like here, these are the type of trades where it's honestly, it's a 50-50 crapshoot. But this, and this, those are odds enhancer trades if you understand price, order flow, and understand what context 1, 2, 3, and 4. And I'm sorry to sound like a broken record, but I want you to understand. I'm going to do this until I hammer it home. Here is the bonds. Here's the 10. Here's the TLT. I don't care what it is. Now, when I trade, if I'm going to trade like an ETF or stock, I will go down to like a 2 or 3 minute chart, because they don't have the overnight price action like a futures contract. So again, I don't really care. Previous day's high, midpoint, low. Where was the open? The open was right here. Where's your weekly? Where's your monthly? Where's your yearly high low? What does it mean when we're above the previous day's high? It's context number 1. So right here, if you didn't want to take a counter trend trade, you waited for this. We rejected right there. We broke the thing. Beautiful long. And then we went into what I call, a range, context number 4, no edge. And then you got the break and retest right there. And again, we were above context number 1. So until we see some kind of personality change, my bias is long until it shows me otherwise. Here was the VIX.
Hey, Jeff, can you hear me?
Jeff?
Yeah, I'm here.
No, this is Arun. Can you hear me?
Yep.
Yeah, Jeff, he can hear you. He said he can hear you.
Oh, no.
Oh, okay. Anyway, let me hear. I'll finish. So, and guys, here was the VIX. Now, I use the VIX as one of my odds
No.
enhancers.
Greg, sorry.
Oh,
No, I saw Jeff actually here. Greg, this is Arun.
oh yes.
Hey, sorry to interrupt
Oh yeah,
you.
no problem.
Hey, great one. Actually, I think it's the same thing that you've been talking about, but gives more structure to it
Exactly.
than before, and
it's a little different because I didn't really outline the context and what the setups were in a context form. So
Yeah, but I think you have been telling the same thing, right? Like, context 4 don't trade, context 1 is
a
the
little
best
bit,
one.
because I wasn't as clear about the setups, like what they
Setups.
were, like,
Okay.
and I wasn't as clear about how to determine what a chart is doing. So meaning that we can come in and look at any chart. I'll just do the euro because it's a little bit smoother. But we can come in and look at anything, and I'll show some stocks in a second. And what I mean is, before I didn't really talk about that. So like context number one, if we're making clear higher highs and higher lows and lower highs and lower lows below the previous day's high and low, that automatically determines whether or not you can swing trade or not. If it is not above the previous day's high or low, there are no swing trades. And why is because price, when it's inside a previous day's range, means it's a balanced day. It's not the day you want to be swing trading for longer term. So immediately, this strategy immediately tells you whether you have a day trade or a swing trade. That's why I love it. And when you do have a context number one, if you're making clear high highs, higher lows, you know what the trade you're looking for. And then the only other two setups that I look for is, are we context number two inside the previous day's range, or do we have the fake out breakout at the previous day's highs and lows? So I wasn't really clear about that in the past. And that's why I really wanted to refine this. So this way I can teach this to anybody. It's just a matter, are they willing to back test and journal it and ask questions and master what context 1 means, what context 2 means, what context 3 is, what do I do in context 4, what does it mean, what is my entries, what am I looking for, the kind of what the candles, what am I looking for, what is my stop, how to use the fixed structure or ATR stop, what is my target. Target 1 is always 2 to 1 until you've proven 3 to 6 months. We never risk more than 1 to 2%. I don't really like risking more than 1% per trade. I don't want to ever risk more than 5% in a day. And you have clear understanding of what the context is. When you come in the morning, you're still going to do this. You're still going to look at the news, look at the fear and greed, look at the breadth of the market, understand, what the sectors are doing. I still want to understand that. And then I still want to, understand what this is doing. But when I come in, all I have to do is look at this 1 15-minute chart. And if we're above and below, I'll still use like a 1 to 5 minute to help with my trades. But if I am day trading, I'll have the 15-minute and 60-minute up, but I'm going to use that same 1 and 5 minute to do my entries. So that's where I really refined it. And I believe, this is why I'm showing you guys, I believe that this is going to make things very simple. It is black and white. It is not subjective, meaning that once you learn each context, it's black and white. Then it's a matter of mastering what the setups look like. This is why you back test and journal it to the point where it becomes second nature. And then once you've proven, and again, the back testing process will never, ever replace live trading. Why? Because you have to get used to the emotions, but you cannot live trade unless you back tested. Why? Because it's foolish. If you think you're just going to open an account and then you have no idea, you might as well just give me the money. I'll give it to charity. You have to back test so you learn how the market works and the rhythm of it. You need to understand how to, do your brokerage firm and all that. You need to understand if your process works. And then the most important is, did you build a statistical edge after those 50, 100 trades? Did you have an understanding of your setups, and did you have a statistical edge with numbers? Remember, a casino only has a 2.5% edge. They have it's 52.5%. They have a 2.5% edge and they make billions of dollars. So it's the same thing with trading. You have to understand, do I have an edge? And by using the 2 to 1, you could be at 40%. But if you can get to, 45, 50% or higher, then you are always going to make money. But the key is can you come in every day relaxed, look at the symbols that you want to trade? And I don't care if you're trading ETF, stocks, futures, it doesn't matter. Trade, it doesn't matter. When you see that symbol, do you know what the context looks like? And does the price action order flow look clean enough for a setup? And that's what takes a little time. But let me run through a few more, and then you guys can ask all the questions. So
Yeah. Yeah, Greg, sorry to
yeah,
again
that's okay.
interview, but this looks great, and I know that you are recording and you will be sharing with us, right?
Yes.
Uh,
Mhm.
okay. Yeah, I have to leave right now,
Oh,
but
no problem.
can I take a look at this and then I can reach out to you back
Sure,
again if I
absolutely.
have
Of
any questions?
course. Of course.
Okay. Thanks, Greg.
I'll send you this, and I'll send you the video after we're done, for sure.
Okay. Thank you
No
so much,
problem.
Greg.
Yeah,
I
no,
really
thank you.
appreciate it. Yeah, thanks. Bye.
So Yusef, Jeff, before I do any
Yeah.
more symbol, do you guys have any questions on this?
Oh,
Is
Yeah.
it pretty? No. I want to know, because I'm telling you, for me, now, don't get me wrong. You've got to put in the work so it becomes second nature. But do you understand like the power of this, of how this simplifies your trading? Whether or not, number one, is it even a swing trade to consider? Number two, it's a day trade, and then understanding that there's pure simple setups, context 1, 2, and 3. And if we're in context number 4, like, this would be context number 4, because I'd have no idea yet what it's going to do. Do you understand the power of this, of how it simplifies? And then once you take the trades, you'll journal and you'll see, did I follow my rules? Did I get number 1, 2, 3, and 4 right? And you back test and journal this enough until it becomes second nature. Then you go live and you start real small. So anyway, that's my 2 cents. But good. Before I show you a few more symbols, both of you, tell me, does this make sense? Am I out of my mind?
I want to see you apply it to my stocks
No
that I
problem.
trade.
No problem. It'll be simple. But Yusef, before
That
I move
that
on, no
because
problem.
see you went through it,
I'll
but
show it to you in 2 seconds. And what I'll do is we'll go to crypto after this, which is live right now. I'll see if I can find a trade. So Yusef, are you getting this or no?
Yes, sure, I got it.
You sure?
Yeah.
So as I always tell you guys, after we're done with this, I'm going to send you the video. And if you look at if you go look at my morning pre-market video I do every morning, I review this every morning. I do the same thing right here, but I do it quickly. But again, when I really put this together, I was like, oh my God, this is so much simpler. Why was I not doing this before? Why was I wasting time? And you know what I'm saying? This way I come in. So let me just show you a few other symbols, and Jeff, you'll give me all the symbols you're looking at. So here's the reason I'm showing you this is just I want to show you just a bunch of different symbols. Like these are the symbols I look at every morning, and these are the symbols that I feel make up the market impulse. So here was the euro. So again, I'm usually coming in around here. I'm usually starting my day around 7, but let's just say 8 o'clock. And also the euro opens up at 8:20. It's a currency. But the overnight traders, okay, so the overnight traders came in. They came in here. They have context number 2. It's inside. It's a context number 4 and number 2, meaning that I can't figure out yet what's going on. It's two. There's no edge right here. So right now, look at what happens. We're inside the previous day's range. Here's the low, here's the midpoint. So when we're inside the range, we're balanced. And the top third, bottom third, or the fake out breakouts are going to be our favorite trades unless price can break out above the previous day's high low to go back to context number 1. Look at that beautiful setup right there. The rejection at right here. I mean, it doesn't get any better than that. That's a beauty. Beautiful, beautiful short. And then if you missed it, look at that right there. Come on. It's as beautiful as it gets. Momentum, the rejection candle, shooting star. I mean, just as good as it gets right there. Really, really nice. And then here is the US session. This is what I would call a little bit choppy. I wouldn't do anything right here. The only trade that I really like right here, this one, it's okay. But this was the trade, and could you have stayed patient enough? Right there, break, retest, rejection at this area. This was the S3 and the midpoint. And again, remember what I said about the midpoint? You would go half size just because the middle is choppy, and I would not consider the half size trade unless it's 2-to-1 to the top or bottom. All right, let me show you 1 or 2 more, and then I'm gonna take your, let me go and do crypto. All right, so Yeah, I'll show you the last 2 days. So this was yesterday. So again, crypto trades 24 hours. Here's your high, here's your low, here's your midpoint. So again, we started off we came up to this area right here, the midpoint and the pivot. There was your short right there. Beautiful. And then look at that fake out breakout. I mean, it doesn't get any better than that. The sellers came in, buyers said, I don't think so. Momentum, break and retest. Look at that beautiful number 3 fake out breakout. This was your number 2 inside the range, your fake out breakout. I mean, it doesn't get any better than that. Now, listen, then, listen, if a symbol does this, though, this is basically number 4, then I'm going to pass. I'm going to move on. There's nothing to trade right there. Okay, when you see that in the middle and just choppy nonsense, next. And then same thing right here, nothing. But now look at that fake out breakout. Now that's a big candle. So, again, this one you would have had to maybe take too much risk. And, I'm not going to lie, but I like this candle right here. And then what you do is you put your stop halfway. I like that fake out breakout. Went from a number 2 down to a fake out breakout. And the reason I like it is look at how it rejected the monthly and the previous day's high. Boom, short right there. And then look what happens. Price basically came back to this range. And then, it broke down. This candle is a little bit big for my liking. It's a nice rejection of the monthly low. But to me, when the candle's that big, I'll usually pass. I'm not, because then your risk is going to have to be way too much. So that's a judgment call for you, but that's a big candle. So really, but that's a beauty, man, right there. That's his beauty. Let me do one more, and then we're going to take your stocks. Where is, yeah, let's look at Ethereum. Oh, no, actually, let me just look at bonds. Actually, sorry. All right, here we go. So here was the 30-year bond yesterday. So coming in overnight, you had a 1 try, 2 try right here at this zone, the open and the previous dive, beautiful short right there. And then break, retest, long. And then look at the rejections right here, the fake out breakouts right here. Very large candle, unfortunately. This candle I like right here, though. This one I would do right here. I like that. This candle, a little big for my taste, but look at that. 2 times the sellers tried to come in. We broke back above. Remember, above is context 1. We tried, they rejected. Came back, boom. It doesn't get any better than that. When you start understanding this type of price action order flow, you're going to be unstoppable. But again, when you start understanding what context 1 means, 2, 3, 4, you understand what the setups are, the entry, the stops, our targets, and you master that. I'm telling you, you're going to be unstoppable. But it's like anything else. If you do not put in the work and you don't do it and you don't understand what context 1, 2, 3, and 4 is, you haven't back tested it, you're not journaling it, you don't have repetition, and you think you're going to come in and just do it, no, it's not going to happen. All right, Jeff, hit me up. What are your symbols?
City and
All right, well, one at a time. Let's do it here. All right, so here was City. So
and go through each, 1 through 4.
Yeah, I will. If there is a 1 through 4, I absolutely will. Okay. So remember, so stocks and ETFs, I usually go down to a 1 or 2 minute just because they don't have the overnight price action. So I want to see a little bit more structure. So, all right. Let's look at the bias here. So remember what each thing is. Here's your previous day's high. Here's your midpoint. Here's your previous day's low. Here is your weekly. There's your monthly high, low, and there's your yearly. Okay. All right. This red box here is your opening range. This is your open right there. So we know, and here's your previous day's close. So we know that City, here's an arrow. We know that City gapped. So when you have a gap up, this is like a bullish candle. If you gap down, that's like a bearish candle. So now we opened up in context number 2 inside the previous day's range. Okay. Now let's look at what happened here. So this is now this area right here is your recent low within the session. This is your previous day's high. So we kind of have this high, this low right now we're playing with. So this is a very nice short right there. But here's the thing. If you understand price action and order flow, this was your recent low. So this is context because it didn't do a fake out breakout. It just hit the top and rejected. This was a context to top third, but you need to understand the recent low was right here. So if you're okay with this much space to target one, then you're fine. Now, if this low would have been down here, this would have been a much higher probability trade for sure. All right. But hey, nice trade right there. Hey, if you did options on this and you did it at the money, like 46.60 right there, and it went all the way down to hey, that's a nice trade
Well,
right there.
See, what I was doing was, if you look at the 3-month chart of Citi.
Oh, so yeah, you're basing off longer term. This is for
Yeah, but
this is
still,
a shorter term strategy, but I don't want to swing trade unless
Yeah,
I'm
no,
above
yeah.
or below. If I'm not above the previous day's high or low, I don't want to swing trade, because what that tells me is that price is neutral right now. Until price can get above that previous day's range and really gives me a good setup with a higher high, higher low, then I'm just going to day trade that symbol until it can prove otherwise.
Yeah. See, I'm looking
Here, let's look here. I'll look at it.
at day trading and swing trading. See,
Right. So that's
I
why
just
this
saw-
strategy, this is why this strategy is so good.
If you look at the construction of the recent chart, it's got a very bullish construction. If
It
you look at
does?
it,
Really?
yeah.
Does that look bullish
you
to
look
you?
at it, what do you call it?
This is
Dragonfly
a monthly
doji,
chart right here. Does that look bullish to you right there?
abandoned baby, or
No,
whatever.
this is a range right here. You're in a range from 53.15 down to about 41. Now that's a nice size range, but until we break out of the range, like on the S&P, we got to respect the range. So right now, let me sync this into the other charts. So right now on the weekly, you're in a range. So the nice thing is about TradingView, let me make that red so we know it's red. The nice thing about doing this, the bigger charts, this is why I do them, is I just want to know where the range is. Now we're at the bottom of the range. So I agree with you that here on the 4-hour chart, you can see that we've got some bullish price action. But if we're going to get that follow through on the 4-hour, I better see price above that previous day's high. Now, we finally did get it at the end of the session, but during the session, okay, if I'm trading during the session, unless I'm looking at that last hour, and there are a lot of people that
what are your hours? 10:30 to
usually
what?
8 a.m. Eastern till about 12 the latest, 11:30. That usually
Okay.
that 3.5
Well, you can't
hour
trade
window.
options
Sure, I can.
until
What are you talking
not
about? I
till-
trade
not
options.
till the market opens.
Right. No. I can't trade. Right. I don't trade options until the market. Right. Exactly. But I will trade futures if I get a trade early in
Oh, yeah.
pre-market. But remember, Citibank is a US based 930. So this was a nice short right here for an intraday trade. Now, the rest of the day was crap. This is what we call context number 4. It's literally not giving us any price action to trade.
True.
Now, if you were a last hour trader, and a lot of people that swing trade wait for the last half hour, that's as good as it gets. This is an absolute swing trade. If you are if you wait, because I can tell you right now, I know a lot of traders that wait for the last half hour because they don't want to if they're swing traders only, they'll day trade during the day, but what they'll do is they'll wait to see the last half hour. And this right here was a beautiful swing trade right here setup. You had the break retest of the previous day's high. That's a beauty. No problem.
Yeah.
Well,
See, I do both. If I see
Yeah, you can.
a chart that's
You can.
constructed in a way that looks like it's going to
Well, here it is,
move
right here.
up.
Here's your chart.
Yeah,
Jeff.
see that very bottom on the 24th?
Yeah.
See that?
Oh yeah,
tells me
that's a nice
something
setup.
very
That,
that
but yeah, but
setup
that
is not
setup was already a week ago. So right
Yeah.
now,
that's what I'm saying. That's
oh
where I
yeah.
wanted.
Yeah. But
Remember we were talking,
you're
and
right
I
here.
was
This is a
waiting for
beautiful
the money
setup.
to come in, and
Yep.
that's where plus
Absolutely. But
if you
this
look
is
at
more
that,
for your, remember, this is more for your, when you, people that want to,
yeah,
they're
for
looking for
intraday.
faster trade. No, they're looking for faster swing trades and they're looking for day trades. This strategy allows you to look at one chart only, and come in and quickly determine context 1, 2, 3, and 4. That's it. That's it. And I have the weekly, the monthly, and the yearly high lows on. So we've got bigger targets already built in. Now, the one thing I didn't show you, which let me show you here, let me just show you guys this. If price breaks out above the previous day's high low, we call this range expansion. So what I do is I take the Fibonacci tool, and basically what I do is I just do low to high, and I'm looking at these right here. I'm looking at 23%, 50 to 62%, and then 200% right here. And I look at that at the top, and then I'll put those on the bottom. So if we break out above, not only do we have the weekly, monthly, yearly high low, but it's the same range expansion as the regular range. I'm looking at, the basically, the bottom third, the top third, the top. So these are just mathematical range expansions that institutions use. So once we break above or below, and I want to take a swing trade, I've got targets that I can, automatically look at without even looking at another chart. So, I do what I do is I look at the monthly, weekly, and the 4-hour chart to see if there's any of this. And then I right click it, and then I'll have it in this chart right here, my 15 and 60-minute chart. And then basically what I'll do is then use context 1, 2, and 3, and I've already got the levels in, so I don't need to worry about it. All I need to know is I am not swing trading unless I am above or below the previous day's high low. Again, context number 2, that's when price is inside. I'm looking for fade trades at the top third and bottom third. I will trade the middle, but I will go half size, and I have to have space of 2 to 1 to the top and bottom. Context number 3 is a fake out breakout trade at the previous day's highs low. Give me another symbol.
Pins.
Okay, let me go down to a 2-minute. So here was pins right here. So pins went from a context number 2 to a beautiful swing trade setup here and here and here. Gave you 3 setups. And then if I put on the range expansions, there's your 23. So we hit the 23. We hit the 62. We didn't quite hit the double. This is basically doubling the range right here. So, and then where was the weekly? Where was the weekly? There was the yearly. So the weekly and monthly, they're in here somewhere. But anyway, that's how I trade it. You know what it is? I want to just keep it simple. Do I have I use the previous day's range, the weekly, monthly, yearly. I use the range expansions. I use the open and previous day's close to quickly tell me, are we super bullish or bearish? Do we have that swing trade above or below? Or do we have context number 1 and 2, which I've explained, and then context number 4, which I'm not sure yet what to do. That's it. Give me another symbol.
NVIDIA.
Okay,
Yeah,
so there we go. So here was
that
the
was a nice intraday.
So here was your previous day's low. Here's your high. Here's your midpoint. So we had a beautiful rejection off here. So I can absolutely see somebody trading this because we rejected the previous day's low. But then we basically went into consolidation.
Right.
Nothing to do. And then you got the break and retest right here. Beautiful. Look at that little break retest.
Uh-huh.
And that was it right there. And then that was your trade. And then now you can base. So now let me show you. If you say you wanted to say you put on a swing trade right now, you're in a swing trade right here. So what I'd be doing right here is this is going to be a key area right here. All right. If we are going higher, I don't want to see the new low of the day. The new previous day low is going to be here. The new previous day's high coming into Monday will be here. The new high, the new low. So, but this is a very key area for me. If on Monday we come in, if this thing is going to go higher, we should see this thing break the previous day's high and go higher. If we break this low right here, I'd be out of my swing trade. So say I got in here. Okay. Now, if I got in here, let's just say, like I say I got in here. Now, remember, now fixed structure to the left. All right. So you already hit almost 3-1. So it just comes down to your game plan. For me, I go 2-1 minimum. 3-1 is my target 3 and 4-1. Now I can tell you right now, if you're hitting almost 3-1, I'd be taking profit. And then I would just reevaluate.
Exactly.
So, but again, are you kind of understanding what I'm saying? Context 1, 2, 3, and 4 tells you quickly what you should be thinking about. And then what it's your job is to back test it and journal it enough so you fully understand what context 1 means, 2, 3, and 4. What are my setups and what am I looking for? Yusuf, is that clear?
Yes, got it.
I mean, be honest with me. I mean, is this making sense to you?
Pretty simple.
Okay, good. Then when I want to see both of your guys' charts, I want to see all those winning trades. So give me another symbol. Yusuf, you have any symbols?
No, not yet.
Jeff, you have anything? What else you looking at?
Those three.
Oh, let's look at, I'll give you some that I'm looking at. Let's go look at Apple. Now I'm trading ARK right now because I believe ARK is going to.
ARK Innovation, huh?
I love ARK. So again, previous day's low, previous day's high. We start off context number 2, bottom third, we get a nice rejection off of this open and pivot. I can absolutely see the long, but if you say, no, I want to wait a little bit, I want to let it play out a little bit, the first half hour, we went from context number 2 to right here, break and retest to a context number 1. We went from an inside day to an outside day swing day. This is as good as it gets. I mean, right there, stop goes below structure. 2-1 was here. This trade gave you 3.5-1. So the same thing as I showed you on the video is there's your low. There's your recent low. Your low is going to be down here, but this is a very important low. If we come in and break below here and say I was in a swing trade, I'm out of my swing trade. This swing trade right here, if you're in it and you're going for the bigger targets, we should be breaking higher. We should break the previous day's high for the next day or two and go higher. Let me show you. Let's look at Tesla. And again, I'm looking at Tesla because these are in play, So look at this one. This one, we previous day's low, midpoint high. Look at this. We rejected 1, 2, 3 at the previous day's high. Come on. It doesn't get any better than that. And then this one gave you unbelievable amounts of trades. It gave you a trade there. Let's see, this one, not quite, but not bad. But right there, look at these setups. You had 2 beautiful context 1 setups. Number 1, if you don't mind trading the open, if you like to wait about a half hour, you got the break and retest, momentum into pause, break and retest. Come on. Doesn't get any better than that. I mean, really. And then look at this, just giving you pivots all along the way. And as long as price doesn't get below these pauses, you're just following it all the way up. I mean, beautiful, beautiful trade. I mean, really, the only time, again, is if, right here, you broke, we broke, even though this was a pullback, you get out of the trade right here. And then, again, if it was earlier in the session, you can always get back, but that is as good as it gets right there. I mean, when you get clean setups like that, when you understand what context 1, 2, 3, and 4 is and what the setups are and what they mean as far as context and structure, you are so prepared, and you're like, you come in every morning, you're confident. And then, as soon as you get your setups, you play it. You're not going to win every trade. And as long as you journal with detail, everything, I'm telling you, it's really amazing. Let me see what else was in play. What else traded
Right.
well?
Greg, I gotta go, man. Shit, I didn't realize it's 10:30.
Oh,
I gotta
okay.
get out of here now.
Yeah, no worries. I'm gonna finish up with you. So 5 or 10 more minutes, and then I'm out. So Jeff, I'll send the video to you, and I'll send you the spreadsheet, and then
Yeah,
you'll let me know how it goes with this.
you got it. You
All
got
right.
it.
Be good.
All right.
So, Yusuf, any other questions you want to go through? So, because I'll finish up. Anything else you want me to show you when it comes to this strategy? Anything else you can think of? No? So basically, oh shoot, I just lost it. So basically, again, that's how we look, every day. It's the same thing. We still go through the context information. We still go through, understanding, what is the main context, what is the intermediate contract, but using that 15 and 60 minute as the anchor chart for faster swing trades, and then using the the 1 to 5 minute to execute our context 1, 2, 3, and 4 is, it gives you such an edge. Once you've back tested and journal, like I said, you come in quickly, you know exactly what your game plan is, you know what the context is based on where price is in relationship to the previous day's range. Is it above or below? You know what it means, either to swing trade or day trade it because it's super bullish or bearish. Context number 2 is inside. It's a neutral balanced day. We're looking for the top thirds and middle, the top third and bottom third. If we trade the middle, it's half size, and we only trade in the middle of a range. Doesn't matter if it's a 1 minute or what we're talking about here. You must have 2 to 1, top to bottom. Context number 3, we're looking for clear, defined fake out breakouts at the previous day's range high and low. And then context number 4, that's when we see big choppy candles, or we see, tight consolidation. We can't figure yet what price is doing. There is no edge, and we wait until context 1, 2, and 3 shows up, or we pass and do another symbol. So with that said, we know what the bias is now coming in to Sunday and Monday. We know that the S&P is trading in a bigger range between 38 and 4,200. We know that the bulls are bullish right now inside that range, and we're going to play that until we get a personality change. But again, if price can't break out of the S&P above that 4,200 or below 3,800, we could be rattling back and forth in the range. And again, remember, doesn't matter if you trade a range on a 1 minute or monthly. I showed today in this webinar, even on the 4-hour chart, I showed you 6 different trades at the top third, bottom third, the fake out breakouts, or if we break out above or below. And I showed you the 2B trades if you trade the middle, but the middle, again, half size, and you must have 2 to 1 at the top and bottom. And then again, breaking it down, showing you the 15 and 60 minute to show you this 4 context situation strategy to quickly determine it. And then also, again, based on if we're inside or above the range, again, if we're going to be day trading it, we're going to move down to a 1 to 5 minute, but we're going to keep that 15, 60 minute chart up so we never lose context. And then we are going to wait patiently until context 1, 2, and 3 sets up. And again, if context 4, which we're not sure about, then we do nothing until context 1, 2, 3, and 4. Now, if there's anything you didn't understand about how we broke down the bias, how we break down our charts from the main trend, intermediate trend, down to our 4 context strategy chart, which is for faster swing trades and day trades, then hit us up at hello@trade90x.com. My goal is to make sure that every trader understands in the community, understands how to prepare for each and every day using the pre-market, live market, post-market routines, how to use that for context situation to quickly determine what your symbols in doing so you are relaxed and ready to go when the setups go. So with that said, enjoy the rest of the weekend. Be safe, and I will look forward to getting back to our pre-market routine on Monday. Be safe.